India's consumption story has been one of resilience, but the last 2 quarters have been somewhat different. Growth has been slowing down, and that's reflecting in the numbers of all FMCG players. So will this resilience prove enough to get consumption growth back to double digits, or is the drop more structural this time around? We pose these questions to someone who has helmed one of India's oldest FMCG companies, Britannia Industries. Vinita Bali, she's joining us right now on the show. Ms. Bali, thanks very much for taking out the time. We had this conversation a few months ago, and the slowdown at that time didn't surprise you. You said it was writing on the wall, and it's just that we're getting to see these figures and the volume cuts that most of the industry is seeing just right now. Has anything changed materially? Is the weakness still predominant according to you?
Hello?
Ms. Bali, can you hear me?
Yeah, I can. Sorry, can you just repeat the question? You went off a little bit.
Okay. No, I just wanted to get your sense of the situation right now. When we spoke a few months ago, you were pretty aware of the slowdown, and you said that it's going to take some time for the industry to come back into form. What's your gauge right now on what's happening on ground?
I think what we said the last time is what we're actually seeing. That, the slowdown that we first saw in the rate of growth of GDP. In fact, this year, every quarter, the rate of growth of GDP has come down, and that ultimately reflects in how people feel, which ultimately reflects in how people spend. And we are seeing the effect of that. So it shouldn't come as a surprise to anybody that we are where we are. And the key question really is, so what are some of the things that have been done structurally to stimulate? Now, having said that, within all of this, I would also say that there are some companies, including, an FMCG company who declared its results yesterday, which has actually shown a very good 11% top, volume growth, almost an 11% volume growth. But I think in general, it is fair to say that what we are witnessing now is the result of a trend that at least some of us had started seeing 4 quarters ago.
Ms. Bali, so if you saw this 4 quarters ago, what's your sense of how tough the trend has become? Because when we hear some of the existing business leaders talk about people or consumers thinking before spending even 5 rupees on a product, it brings to the fore the kind of question marks that people might have in terms of their confidence on the economy.
That's exactly what I said. People spend when, of course, they have money, and secondly, when they are feeling good, when they're feeling confident, when they're feeling secure. So there are several things that are changing. I think, to be fair, we've got a global environment which is not helping sentiment either. So when you look at what is going to spur India's growth, it is either consumption at home, or it is the effect of an investment that has taken place, or it is higher exports that are bringing in higher revenue. And on none of these factors have we seen any improvement. In fact, if anything, we are seeing an overall deterioration in the sentiment as far as the global economies are concerned. The India consumption story has been challenged. We talk about rural. Now, just to give you a very concrete example, take construction, which employs a very large number of people. A large number of those people come from our villages. In fact, if you go to villages in India now, there is at least one member of the family who is somewhere in some city working on a construction site. The real estate industry is in a challenge of its own. Construction activity has come down. And, people are coming back to the rural areas because they don't have work, and therefore they don't have income in the urban areas, which is where they went in search of work in the first place. So I think we also have to remember that the dynamics of our economy are so interconnected that what is happening in one sector obviously has an impact on every other sector. Take services, for example, which make up over 7 or 7.5% of our GDP, which make up almost 55% of our GDP. The rate of growth in services has come down to 7.5%. So you say, okay, young people who are employed in IT, etc. There is also this looming fear now: will I keep my job? Will I not keep my job? We talked about the automobile sector. That impacts everybody who's a supplier to the automobile sector. So that dynamic effect in the economy is what we are seeing now. And, whether it is something that is non-essential, which I can reduce consumption of, or whether it is something that is non-essential that I can postpone, those are the choices that people are making. And we are seeing that reflected in the numbers.
Ms. Bali, so obviously while the core theme has to be that it is going to be a growth-led consumption story, from an individual company's standpoint, how can one look at spurring the demand and creating demand? Obviously, do you feel that companies then have to look at sacrificing margins a bit to make sure that they can get that volume nudge? Do you feel that distribution needs to become better, or distributors need to be given a better margin, which all have an impact on the P&L, but will in turn lead to spurring demand and creating that volume push?
I would say in many ways, companies have to move from lazy marketing to, really activation of their brands and their brand propositions. I think what happens in an economy like India, which has a certain momentum, is that, a rising tide works well for all ships. Now, when the challenge occurs, those companies that have focused on the consumer, that have focused on all the things that you've just said, on distribution, on price points, on range availability, on making their products meaningful and relevant in the lives of their consumers, those companies will differentiate themselves far more than any other company. And let's face it, in every sector there is increasing availability, and therefore the consumer in many ways is spoilt for choice. So this is the time that companies have to really make trade-offs and choices between, volume growth, margins, momentum. Investment is another thing. The economy is not going to stay like this. So if companies postpone their investment cycles, well, that's not going to work in favor of the economy either. So I think companies, managements, the market, investors have to take not just a short-term view of what is happening, but also a medium and a long-term view. Because as we always keep saying, the potential of India is never in question. It is how soon will we get there and what is the momentum which will take us there.
So is there merit in thinking that there could be a different strategy that could be adopted in a period of slowdown, where you push those low unit price packs out into the market? They'd probably get a better response than someone who has to shell out a lot more money.
Yeah, there are 2 or 3 other considerations as well, and that is that, and I think people have heard me say this, the beauty of operating in India is that virtually at any price point you have a significant number in the absolute of potential consumers and customers. And therefore, I think companies have to get more focused. Companies have to get more relevant to the consumers. Companies have to make sure that products are available when consumers need them. Now, this will not work the same way for every company. But I think even in the kind of situation that we are in, companies that respond to the situation in a dynamic manner. And let me tell you something very specific. I worked for many years for the Coca-Cola company in Latin America, and we did lots of studies. And one of the things we found is during a recession, actually companies tend to reduce their marketing spends because everybody's bothered about the bottom line and so on. That is exactly the time when you have to do a lot more to spur demand and spur consumption. So I think the conversations in companies as well as in the boardrooms also have to shift a little bit more towards what more needs to be done to spur that consumer demand, because in the absence of that consumption, you cannot cut your way enough to profitability. And if you see the results that we've seen for this quarter, I was looking at the numbers out of some 2,400 companies that have already declared their results. We're only seeing a top line growth of 8%, and we're seeing a profit decline year on year. It's a little bit better quarter on quarter, the profit, but the sales are not that better quarter on quarter. So I think every company has to come up with its own dynamic mix of, how much margin, how much volume, and, what am I going to do now to secure the medium and long term. We can't have a great short term, a great medium term, and a great long term. That is fairly obvious.
All right. And it's going to be an interesting watch, since you mentioned how these companies have performed on a year-on-year basis. Now that you've got the base revised from last year where the slowdown actually started, you may actually see those numbers looking slightly better this year onwards. But Ms. Bali, thanks very much for joining us. Really appreciate you taking out the time and speaking your thoughts here with us on Bloomberg Quint.
Thank you.